All right. Go ahead. Let's get started. Oh, Henry, I think you're on mute.
Hey, how's it going, guys?
There we go. And we go. All right. Go ahead.
All right, hang on one second. Let me switch to headset. It's not working for me. Sorry, guys. One second. Hello, hello. Can you guys hear
Hey,
me?
yep. Yep.
Oh, awesome, awesome. Welcome, guys.
Hmm.
Welcome. Yeah, today, you guys might have seen that um our meeting location pointed us to or pointed you guys to school. So we have a new
Hmm.
community here that we're building up. Consider this kind of our private group in a way because it has a lot better spam fighting features. So in the group here, in options training for beginners, it's a big group, and so what comes with big groups is a lot of spam problems. So we just went public here on our Facebook page because we
Yeah,
needed
we
to.
went back to public, right? I should say, right? Because we
Yeah,
took it private to kind of fight the spam issue, right? And then, we saw that people weren't joining the group anymore, and therefore, our sales and growth were also going down. So we took it back to public, and we said, okay, let's make the school community instead as the private group. So people who were like, tired of that, um, that whole, spam thing and whatnot, right, can come here, right?
yeah. So for this group, we're trying some new spam fighting tactics. So we have a team of moderators that's helping with that. So
Mhm.
if you want the spam free experience, you can join us here
Yeah, and
on
we
this
can
channel.
actually do live meetings in this particular platform. Only problem is we haven't figured out how to record it, right? And I think we may need to go to a different level, like a pro level or something, to
Yeah.
actually record it.
Yeah. Yeah, so
Mhm.
more to come on
Yeah.
school. So keep your eyes open for any updates. And so yeah, we haven't done a live in about a month or so, but
Mhm.
we've been busy with our last cohort, but we have a new one coming up for next week.
Mhm. Yeah, the 18th.
So I guess we'll go ahead and start. All right. So how many of you guys are here from school? Type school, and how many of you guys are from Facebook?
Yeah,
Type
you guys
Facebook
can
in the chat.
tap
So
it in
that
the
way.
chat. Oh, oh, yeah, there we go. All right, excellent. Yeah, some
Facebook.
people would have been coming from
Oh,
Facebook. Yeah. Hmm.
nice.
Hmm.
Awesome. Awesome.
Oh, both.
Okay.
Yeah,
All right. And then so how many of you guys are using TradingView? Type TradingView if you guys are using Robinhood,
yeah.
Advanced,
Oh, yes, thank you, James.
or
Of course. Hmm.
Thinkorswim.
Yeah, TradingView or Thinkorswim or any other platform that you.
TradingView. Okay.
Yeah,
Good.
I think probably a lot more people are using TradingView than others. Hmm. Ah, good. Thanks. Yeah. All right. Excellent. Okay, so let's get started here, quickly, right? We'll just go
Okay.
over some quick basics for people and then, go to yes, yes.
Okay. Awesome.
TradingView, some of us mainly use it for analysis, but it does have that, trading, ability. It's fairly user friendly as well.
Yeah. And they keep updating it. What I notice is I'll go do something like draw a square or
Mhm.
something, and then they'll change the way that you have it next time, and then they keep adding new features. Usually,
Mhm.
most of the features is, I'd say 99 out of 100. It's a more improvement. They haven't
Mhm.
been any hasn't done anything worse on their updates, and it's awesome,
Mhm.
especially as a free tool.
Oh yeah.
Um, I guess I'll start with some of the OTV basics. Like whenever we're looking, especially on Sundays, to have an outlook of for the next week, we look at SPY and then the futures. Futures showing a slight dip, looks like, and then for
At least so far.
SPY,
I mean, things can change by morning, right? So you guys should always remember that,
yeah, yeah, this current,
right?
yeah, it could change. So it could be so whenever I see too much movement on the futures, and it kind of makes me worried about the next morning. It might go stale. And then also a small movement can turn into a big thing later. So this just kind of gives us an idea of what the market's doing. Um, but one of the indicators that we use most often is ADX, and so ADX is, and it's this one here, ADX plus minus um, GU5, and then it gives you this visual on trend and trend strength. And so how to read this is your signal line is here, and so whenever your signal line is above 20, that means it's a fast trend. And then so in here, it colored the lines to be red, meaning that it's at a fast downtrend. And then so it can also go same for an uptrend. You can have above 20, which is trending, and then also higher lows, which is trending upwards. So currently, where we're at is we're on red ADX. So we're expecting to see lower
And it could
downwards.
turn into orange soon, right? If you also show the squeeze, right? And
Yeah.
I presume, right, enough of you know about the squeeze.
Yeah,
Yeah,
if you guys know about the squeeze, type squeeze in the chat.
right. If you don't know, we'll explain how it works. See, good, good. So it looks like uh,
Squeeze. Okay, good.
people know about it. Good,
Good.
good. A couple of things we look. So the squeeze. Just as a quick summary here, right? It works as both a momentum indicator as well as a volatility, kind of indicator, right? Cyclical momentum and volatility. So, in that midline, right, that you can see, right, the one that goes right down the middle of the histograms, when things are showing as green, that means the volatility is higher, right? There are bigger moves and things like that, right? When it shows one of the colors, black, red, yellow, and so forth, right? Depending on how you choose to set it, that means price action is getting tighter, right? Now, I particularly am more interested when price action gets tight on, say, the weekly or the monthly chart, right? Especially for the markets. So, because any move up or down usually tends to be, fairly large afterwards. So, I like to, look at that, right? As well as the movement of the histograms. So, the red histograms here showing a downward trend, right? Downward momentum, selling off momentum. While, the yellow kind of starts to show a little bit of accumulation after a period of, selling off, right? The light blue or cyan, cyan colored histograms show like the accumulation, is now accelerating, right? Shows the uptrend. While the dark blue histograms show a kind of not necessarily full selling off, but maybe more like distribution, right? People are taking profits, right? But there are enough participants in the market to keep it kind of steady, right? And usually when these histograms get close to that midline, right, that's when you can start seeing tightening price action. And you can see in the previous one here, right, where you see this orange ADX, right, pretty tight price action for a while, and then it, you know, bang, right, broke through that support, of that channel and went down for a while. Right. This was also a period of time when the weekly squeeze was showing tight price action as well. So this is the time to really pay attention, right? It's like, oh my, looks like people just cannot make a decision, right? And this is the time where I would recommend taking profits if you have if you've been keeping positions for quite a long time, right? And they're showing quite a bit of profit, that would be the time to kind of start taking it off. Um, and then of course keep watching those channels, right? Keep watching that support and resistance and see if it breaks out. Sometimes, right, we have seen where it breaks out to the top side, right? And that's a good thing, right, as well, right? But also you have to be prepared that if it breaks through to the downside, and depending on the I guess news climate at the time, right, it is very possible that the drop could last a while, right? So always keep watching that, um, that support, that resistance, right, as well as what's going on with the squeeze, right, both in the daily and the weekly charts, right? Monthly usually doesn't change all that much. So I would say, okay, at least once a month, go to that and, get the bird's eye view. But generally, we'll be looking at the daily and the weekly charts for, these, kind of longer term trades. Right. For those of you who are interested in day trading, you can go down to the hourly and lower, right, which can also work. But also, my advice is keep an eye on the daily chart to see whether we are at support or resistance, to kind of use that to your advantage. So, yeah, you know, uh, I guess if you guys have questions, you can type it in the chat as well. Henry, go ahead.
Yeah. Yeah, how like how Norm was mentioning, about during this kind of orange ADX period, it's also known as the chop. And so the way you know that we're in chop is when you see the ADX indicator is below 20. So below 20 means non-trending. So non-trending is exactly what it means. So it's pretty much, as you can see here, it's kind of staying within this trading range with the 21-day EMA as its midline. So when the market is moving in this fashion, it's safe to say that prices revert to the mean, meaning to the middle. When unfortunately when price action is like this, the market doesn't move up. So this is not good for those of you who are in calls, for those of you in puts, so especially long term, because then it's just decay that's eating at your positions. And so, whether if you had Microsoft, Netflix, or if you had Apple, this is going to affect you because SPY is kind of giving you the footprint of the whole environment of the market. So you're going to have a hard time getting those longs to get profitable, considering that the market's moving in this way. So during this period, it's acceptable for people to just, say, hey, I don't really want to trade this market too aggressively. Like this is the time when people start to force trades. They try to look for lotto plays that where people are looking for something with highly less probability, but you make a grand slam overnight. Those are people get tempted to buy things like that during this time. But if I'm a conservative trader, I might just stay away. This is a good time to take a break, go
Yeah.
golfing, practice on your golf swing,
Mhm.
work on something else. And then during this environment, this I recommend this one for more advanced traders, but still keeping those positions tight because when you're in this when you're in this mode where it's sell the rip basically is this environment, it's safe to say that anytime that we hit 21, you can sell the rip in these situations. Or if you want more entries, go for the 8 EMA. And then this one is everyone's favorite, buy the dip scenario. And so we enjoyed buy the dip scenario since April, pretty much the recovery after the Iran war news kind of got deployed. And so now we're out of this kind of easy zone. So this is the time that you kind of want to take on a little bit more risk. Instead of maybe one contract, you might trade, 1 to 3, might be 3 to 4. So this is a better time to get those gains. But now we're currently sitting at this. environment too, and also look at the slope. So as you can see here, this is reversion to the mean chop. It's pretty much horizontal, and then when we have the sell off, you can see that we have the 21-day moving on a downward slope. On the by the dip environment, slope is upwards, and so right now what we have is something in between of a sideways slope and then maybe slightly up. And so looking at kind of the big version of SPY, which is the SPX, and this one gave us a clue. And I found this by accident. I was like, wait a minute, SPY is sell the rip. It's not quite going down, but let me look at SPX. So SPX is telling us another thing. SPX is telling that we're at, reversion to the mean. So that's pretty much a safe way to say that the market is going to behave in that fashion. So go back to the first slide. Call options or put options. And so I'm sure all of you guys know, buying an option, whether if it's call or put, it means that you're going to be controlling 100 shares. And so one of the ways I like to think about it is if there's a call option for Apple and it's, I don't know, 2 weeks out, it's maybe 10, 20 points, or let's say it's 30 strike tickers above, and it's $250 to control 100 shares for the next 2 weeks. The way I try to think of it is, do I want to buy 100 shares of Apple at a discounted rate? Like if I had the money for Apple to buy 100 shares, would I want to buy it at this current point? And so if I take it back to this chart right here, and I can see that, hey, we're at red ADX. What is it that's going to give me a high conviction of to buy 100 shares of Apple's cash? And so if I were to take that trade, is the way that I would think of it. The psychology is that I am buying at almost 52-week high. That's one risk here, that we could, cross this line and continue higher, or this could be a ceiling and we go down. So just with that example, the likely thing when I see this and I see red ADX, the slope of the 21 day is pretty much horizontal. And then so that kind of tells me, hey, that 100 shares, am I going to profit off of it? Kind of like the cards are stacked against me to kind of say not as likely. so so that's just one way to consider when you guys think about your calls and puts, that do I want 100 shares of that stock? And then hopefully it being like a S&P 500 or a blue chip stock, because if you were to buy 100 shares of XYZ radar company and we're in this kind of environment, you're the chances are also stacked even farther against you, since the majority of the market is not moving in that way. So yeah, that's it for environment and calls and puts. Um, So yeah, so green ADX, buy the dip environment, red ADX, sell the rip, orange, we're in chop. And so this actually, when the market moves sideways, is not untradeable. It just has to be traded with different tools. So at OTB in our accelerator class, we have the spread trading portion of it, which is the OTB paychecks. And so, funny enough, that's been pretty much the reliable way. It's the most boring way, but it's been a reliable way to kind of trade in these kind of choppy markets. But yeah, red ADX, you guys might want to stay out of it. You'll thank yourself later, especially if you're new. Green ADX, like this is a good time. This is when you can really lay on that conviction, and then kind of get your portfolio into the positions that you want to get into when you see them on sale, on sale prices. Um, if we were to zoom out and just think about what indicators are actually the most helpful, for me, my favorite is weekly trend would be one of my favorites, and I think for Anon's is Darvis boxes. So we'll try to look at some weekly trend examples. Let's see if I had one. I think Microsoft was one. Let me change to weekly. So weekly trend. Um, why I like weekly trend, it tells us a whole lot. I like weekly trend after a downtrend. A weekly trend break after a downtrend is what I should say. So I think this was a trade maybe about 4 weeks ago when Microsoft was selling off. I mean, I guess just like the rest of the software section was doing the same thing. Um, we had that downtrend, and then what we started looking for the break in trend. And so this is really powerful because it tells us one of two things. One is that the downtrend is over, and two is that we're either going sideways or up. And so I like that stacked up against our favor to take in a trade. And then so the third thing I start looking at is squeeze histograms. And so Anon touched lightly on that. Yellow is kind of the beginning of accumulation. So this was one of the weekly trend breaks that we liked seeing. And then we're probably going to go over this ticker again, but Visa and Mastercard, we've been watching this one, me and Anand, and so we like the weekly trend break here. This is actually a good. This is a really good spot. I mean, if it's done it before, but you can capture that move. And so this is since February 2025 all the way to pretty much a whole year, a year and a half of this downtrend. And so and then the related tickers are kind of moving the same way. So yeah, make sure when you guys are scanning before the market open on Mondays, on the weekends, look for uh weekly weekly trends because they're pretty strong. Consider that as you go higher in these time frames, these trend lines become thicker and thicker brick walls. Like just think of like, one day this is like drywall, and then weekly that'd be like wood, and then monthly that'd be like your brick or your steel walls of resistance or support. And so when they break through it, then it's a big deal. Um, Darvis, let's see here. Let's see if I have a clean one to do. Darvis is on. Let me do SPX. All right, let's choose a neutral color. Let me choose white. Let's start this one here. Actually, it's been staying within this Darvis for a minute. I'm gonna make this one Darvis. And we're gonna go white. And then so why do I choose white? I choose white because for me it's easier to see that I'm kind of waiting for the market to make a decision point. And so let me change that to green. If we trade in that box, I'm bullish. And if we trade in that box, I start to be not bearish, but cautious. And then here, let's see, these are going to be very multiple boxes stacked on top of each other. And so pretty much you're capturing your support and resistance all in one sweep when you do the Darvas box. And it kind of makes it easier on the eyes to compartmentalize like the move that's happening. That was really a really tight one. And then this one, I think this one we start getting into Iran war recovery, pretty much V-bounce and some V-bounce and a whole lot extra. So yeah, so that's just a quick demo on Darvis boxes that if you're ever lost in, while looking at a chart, start to group them up into ranges because stocks will typically fall in those kind of ways. If you can't draw a Darvis box on it, then it's probably a good idea to stay away from it because it's going to be unpredictable.
Huh.
Let's see. Let's do some Apple here. And then, so I think there was another student that mentioned in another class that they found an automatic Darvis box tool. And then that can be helpful. That can be good. But for me, I stick to just the manual drawings, just because when I
Yep.
revisit when I revisit these, it kind of gives me like a price memory of like where it was and looking at it a little bit more intentionally, kind of like you memorize the chart a little bit better. But yeah, the third thing I like, and this one's my favorite, is 50 crossing 21. And I think that what was that site with all the charts? Finviz, yeah, Finviz. And then let me set that one up real quick. Let's see. Let's do simple. I like simple moving averages. They're a little bit sluggish, but I feel like the moves are a lot more smoother, I guess you could say. And I'll make that one red. And then I'm gonna do SM. all this stuff come from. And I want to do SMA or do gray 200. And I'm going to take out my 21. All right. Okay. And let me hit save. So Finviz. So when the market is moving pretty tight like this, I mean, I guess I still like using 50 crossing 21. I like to look at it on big picture moves. And so how many of you guys have heard of the Golden Cross? If you guys heard of the Golden Cross, type Golden Cross in the chat. All right, so I'll let you guys answer on there, and I'll start going on here and reviewing the
Mhm.
chart. This is an example here of a golden cross. This is a slow, simple moving average, 50-day crossing, or a fast moving average, or medium moving average, I should say, crossing a slow moving average, which is a 200. I think in a year there's right around 200 and some change days, trading days of the year when you once you subtract all the weekends and holidays and stuff. So this is the kind of the average movement of the stock. When you have this faster moving average crossing a slower one, it's an indication of this could be a potential large bullish movement. And then this is on the SPY. So if on July 1st you started loading up on calls on SPY last year, you'd be a pretty happy camper right now. You would have enjoyed a move of, let's see, around 20%, around 110 points. Yeah, you'd be sitting pretty good. And also too is if you're holding a lot of shares of SPY and then you happen to see this, this is probably the point of that there's possible more pain ahead on this death cross. And so let me go back and look for another golden cross. It looks like February 2023 on the 6th. This is pretty much after that terrible 2022 year. I guess raise your guys' hands if you guys went through this period because this was not a fun time to trade this period right here. But there, with whenever there's kind of these kind of bad times to trade, markets will kind of snap back into the normal times of trading. So here's another 150 crossing 21. And so I'll go back to FinViz because I was about to screen stuff. Let me look for stuff that I only want big stuff. So let's go large market cap. And I'm gonna go to technical, and I'm looking for a 50 crossing the 200,
Huh.
50-day moving 200. If you guys can mute, uh,
Oh yeah.
appreciate it. Thank you. So we're getting some feedback, and then I'll run a scan. Okay, looks like it's scanning for me. I got 20 results. And the first thing I look at is, do I recognize any of these names? If you guys recognize any names, just type the ticker and we can look at it. This one stands out, Snow. And this one's been getting beat down, as I remember.
Only problem with snow, right, is that it can be volatile, so you have to be prepared for sometimes being taken for a ride,
Snow,
right?
Snow's a crazy one. And so,
Yeah.
as you guys all may know, software has been taking a beating, and that took down Microsoft with it.
Uh,
But here is an example of a 50 crossing the 21. And so when I see this right away, this looks like things are improving. I like
so you
that.
you can you can buy on a pullback here, right? But again, be careful because you can see it's pretty volatile,
Yeah.
right? After earnings, it just gapped up like heavy,
Yeah. Let's see. The last time we had a golden cross, um,
right? So maybe
yeah,
you wait till the
you
gap
you
fills to a
you
degree and then get back,
you would have been okay.
right? If you
This
if you
golden
bought at the
cross
gap fill,
would have been okay too. Yeah, this kind of crosses kind of often.
that's
But
why, right?
definitely
It's
this,
really volatile,
yeah, this one here, your death cross here.
right?
Let's see what is that? Let's see what indicator is giving me that feedback. I'm not sure. I have to recheck. Let's be this one right here. All right. Let me clean that up. All right. Let me go back to the list here. And so I'm looking for bullish crossovers because I chose
Let's look at
50
HPQ.
crossing
Right.
HPQ. Okay.
Yeah, in the chat, Mike Hoffman asked for HPQ, so let's check that one.
Oh, okay. Hewlett Packard. All right, let's see.
Hmm.
I remember Dell started hitting the news
And it looks
more
like it is
often.
golden crossing here,
That's good.
right?
Okay. So that looks positive, or it looks like
Yeah,
it could be developing into something more positive. So I'm going to look at it through the weekly lens. Oh, I like that trend break. That
yeah.
looks good. Let's see. Let me go back to
Now,
one.
there is potential that we may not get market help with this because the market is kind of hitting that resistance. But if we break out there, then this will also likely keep going up.
Yeah, it's funny. It's funny that this one
Mhm.
showed up here because Dell was on the our breakout list last week, but because the market's been behaving that it has, it did not come out to anything. But let's see. For Dell, there was a potential breakout here. So this one looking really healthy. HPQ could be some change in direction here. Let me look at the monthly to see if I can have something supporting on the monthly side. Okay, this might be shaping up to something good, but let me look in the past. Uh, okay, that's a nice move on the monthly yellow. This is a nice move. Yeah, it could be something. Um, but yeah, also it's one thing to consider um the popularity of a stock, because I remember I forgot what book that was from Anand where it talked about the stock market being like an auction house. So if the auction house is full, like just say like for example it's Apple, then you have a high potential of the people filling the auction house and buying more of the stock or that's for sale. But for HPQ, think of that as an auction house. Now, how many people are going to be lining up in that auction house to buy the HP stock? I mean, like I know the name, because I remember at one point there was only like three computer companies at one point. It was like Dell, Compaq, HP, and like, what was it, Gateway? Anon, can you think of any others
Gateway,
from the?
yeah. Comp
Yeah, yeah,
USA,
yeah.
although Comp
Oh,
USA I think was more
no,
of a store.
yeah.
Uh-huh.
IBM. Yeah, I sometimes forget.
IBM, yeah.
Yeah. So this one you're gonna need that help from the popularity, just like how Anon mentioned on
Hmm.
this one. And then so I'm gonna flip the scanner to look in the negative direction. And let's see, where did my thing go? Oh, my window just disappeared. I'll open it again. And it was, all right, screener. We're gonna look at only the big boys, large, and then technical. We'll do 50 crossing below. All right. Okay, so you have any tickers you guys see? Just type it in if you guys recognize them. I know you guys recognize this one. Okay, we'll do PFE. PFE. All right, we'll switch to daily. What's going on with Pfizer? Okay, so we have a death cross on Pfizer, and let's see, the thing hasn't been hot since COVID. Wow, surprised that the we reached all time high, and I
I
guess
know
so. After
doing.
looks like after vaccination was pretty much all cycled out or all circulating. Um, let's see here, we have a death cross, so yeah, that doesn't look good. The last time we had a death cross looks like was November 24th and it's like February 24th of 23. And but the first one being 22. Yeah, so this is on negative movement. Let's look for another one. Guy lead. Oh, looks like some biotechs in here. Um, AMRZ strategy. Yeah. These really stand out to
Stuff
me.
like fucking dudes in the back of my.
Yeah, please mute.
Like that fucking dude in the back of my car. Wow.
All right. Yeah, if you guys uh can't be mature, you guys can't be in the group.
That's okay. Yeah, no problem.
All
Can just
right.
get rid of that. Oh, yeah.
And let's see, we'll go back to the slides. All right. And we'll go over squeeze and then we will wrap it up. All right, what do we have here? Let's start with let's look at this. Let's look at AUD. This gives us clues of what the market might be telling us. Looks like a lot of not a whole lot of movement. We are under the 50 days, so that's slightly bearish. If we're above the 50, that should be good in general for the environment. Let's look at dollar. The dollar is probably gonna be 101. It's DXY. Oh, 101, yeah. So when it comes to trading, above 100 is not the best. It means that there's people selling off and wanting to cash for whatever reason. Could be fear, could be reallocation. But also during this time, it's a good time for when we exchange our money to other foreign assets. Whenever, like for example, me, if I change to another currency, like Indonesia, sometimes I send money to my family there. Whenever this number is higher, I'm getting a really good exchange rate. So I guess travel time. This is a good time to take advantage of your dollar conversion. And then so for VIX, so VIX is under 20. This tells me that it's calm and cool. So a high VIX doesn't necessarily always mean that we're gonna go down, or a low VIX doesn't necessarily mean that we're gonna go up. But this just lets me know that the market is complacent of where we're at right now. It's not overly fearful. It's slightly bullish. Not overly fearful, but slightly bullish. So
Actually, when the
market,
VIX goes down, right, like a lot, right,
yeah.
especially like if you look in the weekly chart, right, and it starts to hit that bottom Bollinger or a certain support region,
Oh, this is good. This is
um,
good. Yeah.
right, there is a possibility, of a drop, right? So when I see that, weekly VIX starting to get too close to that bottom Bollinger, that is a time to start, taking off some positions and getting into more cash, right? And I think you can, Henry, if you keep going back, right, you can see and do a comparison with the SPY at the same time. It doesn't always go down like a huge amount, right? It could just be a blip, right? Like it just goes down to the averages, back up, right? So you can see, in some cases, right, where it goes above the Bollinger. So um, and you can see the drop on the SPY when that happens, right? So we kind of combine a few things here, right? We look at how tight the price action is for SPY and QQQ on the weekly, right? And at the same time, we also look at the VIX weekly and check how close it is to that bottom Bollinger, right? And if we start seeing yellow histograms coming up on the VIX here, right, on the squeeze there, right, for the VIX, we start to get more concerned. Right now, again, it could just mean a little drop here and there, right? Um, but again, right, caution at that point, right? Probably not always, not a good time to buy when that VIX is so low and close to the bottom Bollinger, right? Time to either wait or maybe do short-term trades,
Yeah,
right?
good
And
point,
you see
Anand.
we are starting to come back there again, right? And again, right, it could mean, you might have some time here, right? It tends to stay there for a little time, right? But this is the point where I would be like, okay, is there anything I don't want anymore in my portfolio, and start to maybe get rid of those.
Yeah, good point, Anon. What Anon was mentioning, kind of a warning sign in case you ever see the VIX on the weekly getting too close to the bottom Bollinger, that it's probably a good time to let go of those large profitable positions, or they could be leaps, it could be shares in heavy profit, could be some correction that could be coming ahead. And so bringing it all together, calls versus puts. Calls is you want to own and control shares to the upside. Same thing for puts, opposite for the downside. Check the market first. Check ADX. ADX can tell you a lot about how how your conviction should be, what should your risk be. Um, Also, too, how often are you gonna have to check on your positions? If we're looking at a red ADX, you're probably gonna want to be monitoring your positions a lot more closely. But where if we're in the green ADX, then you might want to give those options some time to grow, or those positions to grow. Weekly trend, Darvis boxes, 50 and the 21, or 50 and the 200. Those can kind of help you look at the macro movement of the stock, the route, versus because our what we at OTB we primarily do swing trading, so we're looking for broader moves naturally. So if you're too focused on the shorter time frames, then it might shake you out. Like, say, for example, if you're in a 3 week position, but you're looking at like a 30-minute chart, then it's going to kind of scare you out of your position. But if you're doing swing trading, like holding looks like 3 to 4 weeks on options, or maybe a month, like what we do, you want to skip the noise and look at the macro moves. And then let the squeeze tell you also the broad direction. And are we in accumulation or distribution is your main question that you want to ask. Protecting the position. A rule like there's a 50% option rule of a drawdown, but it could be tighter, 35 to 50. If your option isn't working and you're losing that, then it's probably not, it's time to let it go. A lot of people tend to hold on to their losers too long. And in an environment like this, you have to be able to identify them right away. Um, yeah, or you could be left holding the bag, and then your accounts, or you can be holding positions longer than intended, and you can't take any new trades if you're holding those red positions. But yeah, and that's what we have pretty much for today's Sunday session. We can do a little bit of questions.
Um, the Squeeze Pro on TradingView, right? Henry, can you give the name of the indicator? We can
Oh
put that
yeah,
in there.
yeah, sure. Let me put that
And
into the chat.
yeah,
All right, squeeze.
right.
Oh, simple.
Squeeze.
Wrong.
No, 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 wrong one. Yeah,
It'll be this one right here. Pro, make it
Squeeze.
0.
Yeah, make it 0. That one.
But yeah, look, you guys can screenshot this one.
Yep.
You guys can practice with it.
Mhm.
So, all right, let me give you guys just a quick
Oh, and I
preview.
actually programmed it into Python.
Oh yeah, that's right.
Yeah, yeah,
Yeah,
this
it's
one.
Python
Yeah,
Python
yeah,
version.
yeah.
So, as you guys might have heard, I mentioned earlier, next week we have a 3-day training course for our accelerator. Don't ignore these dates. This was from last week, but I'll just give you guys a quick preview. If you're looking for repeatable processes, you actually get 3 systems from us after the accelerator. You need only about 30 to 60 committed time for the week to do the studying, just kind of like how we did today. It's not gonna get you rich overnight, but you will have to do homework in between sessions. You have to manage risk on every trade, so you can't just put in a trade and walk away. You have to manage it, and then if you're ready to make gains on your portfolio and ready to play the long game, pretty much the 3 day roadmap is one is market psychology, day two is the three gems, and day three is spreads. Pretty much if you
Yeah,
there's eight.
this is a good way to make an income while you're, waiting in between opportunities. Trading opportunities or other, kind of opportunities, right? We enter one, SPX trade per week, right? And generally we get the money back within like 2 to about, sometimes 10 days, but mostly between 2 to 5 days.
You know, yeah, the paychecks is a way to, I guess, take action on the market, and you can take it whether the market's going trending up or trending down or sideways. Spreads kind
Mhm.
of lets you take advantage of all those.
And which spread you do depends on which way it's trending. So, generally you will do, like the bull put spreads for upward trending and maybe even sideways, trending. And you can do the bear call spreads in the downtrend.
Yeah, it's not
Mhm.
the exciting way of trading, like not like Wolf of Wall Street or anything like that, but it's
Yeah.
functional system.
But it gets you something, most of the time it gets you something every week.
You also get
Yeah.
breakouts, the breakout
Yes.
systems. And also just something to keep in mind is that traders 95% eventually fail. Um, I think I thought trying to think of it as like getting back on the horse. Like the first
Yes.
time you try to ride on a horse, you do it improperly, you get kicked off, and then so when you decide to come back on, which if you're too scared to ever go back on, you probably won't be able to learn. But if you keep jumping back on, then you know
And I think that's the
you have a
reason
chance.
really why 95% fail. It's because they usually just say, all right, this is not for me and give it up right after.
Yeah, I think also knowing how much exposure should you give, on a daily
Yes.
is one of the
So
things
that
to
you don't
think to
blow up
think
an
about.
account.
Yeah. So the gambler chases gut feelings, chases momentum, hold losers, sells winners easily, prevents change after losses, skips journaling. They react to every headline. Like they might be researching too much. Example is they're in a call position for, I don't know, XYZ radar company. At night they decide to do farther research in YouTube, and then
And they
they
don't they
they
don't wait for a setup, right?
or they just
So
heard about it.
many of them don't have setups, right? And even if they do, they don't tend to wait for that setup to manifest itself before they actually get into a trade.
Yeah. Yeah, that could happen too. Over research, like if you're researching too much and you have a good setup, you might scare yourself out of the trade. So yeah, I'd say the OTB style is more about the technical analysis, and less about, I guess, what you know researching on a stock, I guess you could say. Um, but yeah, and then this was about the VIX. This is about a little bit about what the and uncovered about the VIX. Except this is on a daily perspective. I can share this with you guys after the call. Um, yeah, we can share this
Yeah.
one with you guys for the VIX reentry on these slides.
Oh, and
You're also going to get the volt
the
too.
percent win, right? It depends on the strategy, right? So the spread trade strategy is between 85 and 90%, success. The breakouts might be like 2 out of 3, right? But because of the money management strategy that we teach, right, your losses are small on the times that you lose, and the winners are really big on the times that you win. So you actually end up, you know on the whole, higher than what you were before, right? And we don't recommend the breakout trading all the time, right? So if the market is like going sideways or going downward, we tend to either reduce the risk or stay out of it altogether, right? Until things are uh, back to, I guess a better environment for such trading methods, right? So yeah, I guess Henry, you're just going to quickly, show the. Uh,
Um,
mhm.
I have numbers on here.
All right.
Okay, so for breakout methods,
Oh,
it
and
only needs.
just a quick thing. To answer further answer the question, the squeeze gem strategy, right, works about, and it depends on the
Mm,
it depends on the time frame you're using, right? So if you're using weekly charts and monthly charts, and you see that squeeze turning from red to yellow on the market, right? This thing actually works like 90 to 95% of the time, but the opportunities are very far apart, right? So that's kind of the disadvantage, right? So if you're waiting for that to happen, right, that's actually good because it can be a really good wealth builder, right? But it happens like the weekly squeeze one happens about once every year to a year and a half. The monthly chart going from red to yellow on the histograms happens about once every 3 to 7 years. But again, very, very lucrative when you get it.
yeah, this is when one of the gems hit, and this is our kind
This
of
was
our
the
first.
weekly. This was the
This is
weekly chart going from red to yellow,
Yeah, this is one of the
right?
gems from April. This is
Yep.
our first student, and then so he was able to do
Yes.
that. At that time,
So it
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 was
works
it was
really well,
it was easy during that time. Yeah, during that time
but
was easy.
you
Yeah.
have to wait. You have to really, wait for that opportunity, and that in the end is sort of that disadvantage, right? If you're one who likes to, be trading more often, right? That particular situation appears like Henry. You can show that particular, like on the SPY, right? Weekly squeezes on the SPY and the QQQ, right? Depending on which way you like to lean, right? So you can see here, right?
That
Right
was it
after
right
that
here.
whole Iran war situation, this one was a very quick one. So you would have had to see that yellow and get in during that, up move, right? And you would still have succeeded, right? And if you go back one more, right, you can see, oh, there is another one, right? That was after the tariff situation. Keep going back, right? We also need to show what do you do when it doesn't work, right? See that one, it worked. This one, right? So here, and again, we'll also talk more about this in the course. You can see that it kind of it was pretty erratic, right? This was because the Fed was raising interest rates and had a plan to raise interest rates for a while. So a lot of people are like, oh, you know what? I'm going to, not invest, or I'm going to take profits quicker, right? So you have to, oh, we don't provide scanners on TradingView, but we have our own sort of scanner that is based on the, uh, on the squeeze and the, Bollinger Bands and things like that, right? But we provide that, I think, for the students who take the course, right? For those who are interested in that,
Nice.
right? But yeah, of
Good.
course, we'll
Welcome.
continue to have these live sessions, more often now, right? We were still trying to hash out things for a little bit here, but Sunday at around this time, we are going to try to hold these sessions and go over charts and things like that. So for those who are more, I guess, waiting in the wings, so to speak.
Oh yeah, the Facebook group will always be free.
Yes, a
School will be
Facebook group will
free.
always be free, and
Um,
school will
i-
also be free.
if
So,
if you guys are
right,
brand new into trading, this is a good place to start. The
yes,
quick start. If you've had some screen time, if you had maybe 2 3 years you've traded before, or you're getting back to trading after maybe a year break or so, this is a good place to be at too.
Right.
Or the
The
clarity.
clarity session, right? So if you're like, hey, you know what, I don't want to commit the, money for the course, right? I only have some questions about certain things that I'm doing. Oh, yes, thank you, James. Yes, of course. We tried to make that one as much as detailed as we could, right? And we're keeping, we try to keep that price the same, as always, so more people can get it.
Yeah, these
Um,
both of these give you Discord.
yep.
But then this is 1 hour. The clarity includes the quick start. So if you're in between the quick start and the clarity, just get the clarity because you'll get the quick start included.
Yes. And we'll answer like it we say an hour here, but it tends to go longer. Sometimes it goes to an hour and a half to 2 hours, depending on questions and whatnot.
Yeah, yeah.
You know,
Our purpose is to get value driven.
yeah, as
It's
much as
kind of
possible
what
for
we want to give
the
for you guys.
amount. Yeah.
But yeah, I guess to wrap it up, next week we're looking at Visa and Mastercard, and
Right.
if
And still keep an eye on the SPY and the QQQ, right? Because again, that VIX being close to the bottom there is a bit concerning, right?
yeah, yeah, we'll see what happens. Yeah, for Visa, Mastercard, I want to see yellows here because yellows, as you guys can see, it can be pretty explosive. And if there's inflation, I feel like everyone's going to be using plastic, and that's a nice move right there. So, if we get in, I'll put it on the Facebook. Consider that a gift for you guys who attended. But yeah, I guess that's all we have for tonight. Thanks
Just
for
for yeah.
joining, everyone. Make
Yep.
sure you
Thanks for joining.
join school for the spam free experience, and then
Yes.
we'll see you guys in the chat.
Yep. As always. Yep. Thank you, guys. See you. Let me stop the recording.